Hello, and welcome back to the show. I'm Blake Oliver,
And I'm David Leary.
and this is our last live stream of
This is
2023.
the last one of 2023, wrapping up the year.
David, you haven't taken any official paid time off. How are you doing? Are you feeling productive in this strange week between Christmas and New Year's?
I feel like, we're in a weird spot, right? Because it's our busy season. Everybody wants CPE. I also feel like accountants that I get a lot of out of office messages, but they're all kind of really working because they're catching up on conversations we had in October. So email threads from October, September are now bubbling up into my inbox, and I'm like, oh no. So I'm putting stress on myself. Like, oh, I got to reply. I got to be on top of these. So
Yeah.
I'm feeling this, like, I'm still in the crunch. I think yesterday the wife even gave me some grief about like most of the world slows down this week. And I've not felt like I've slowed down this week.
Yeah.
Hopefully this evening and tomorrow for sure.
I don't like taking off time this time of year in December because I feel like things slow down anyways a little bit. So I want to stay up on my email. I don't want to let that inbox build up so that I have a big one in the new year. And then I take time off in January. But maybe that's just the nature of our business, right? CPE, continuing education with Earmark. 80% of CPE or something like that is earned between December 1st and December 31st, which is totally
You should see
ridiculous.
the people doing CPE on Christmas. People are subscribing to the Earmark app and taking classes on Christmas Day.
So if you're in that group, which, hey, I've been there, you can get some really high quality CPE for listening today to this episode. Finish listening to this hour and then download the Earmark app and you can register for the course. It'll be online. Although actually, I don't know if we'll have the course up for this episode until next year, but you can go back and get credit for all of the other episodes you've listened to and get your CPE out of the way.
Or you can get your CP for this one. It puts you off onto a good start for 2024.
That's right, exactly. And that's the key. All right, New Year's resolution. Don't let the CPE pile up. Use the Earmark app every week to get a free CPE credit and do a CPE every week and you're done before December even rolls around. And then when busy season happens, I guess you can also like do it when you're driving in the car. It doesn't matter. You can. We have a lot of folks who drive to work, listen to an episode, get CPE. But my favorite example is we had a listener, Hannah, who said she got her nails done and earned CPE while getting a manicure. Like, I mean, isn't that amazing? What a world we live in now. Self-driving. We don't quite have the self-driving cars, but we do have the CPE while you get a manicure. But I want to talk about busy season because that's coming up. I know that the anxiety is weighing on some folks already. And if you are a firm owner or you have a team that you manage, you may want to pay attention to this new study by Slack. A global survey by Slack involving over 10,300 employees revealed that 37% of employees work after hours at least once a week, with 54% doing so out of perceived necessity. So over half are working late because they feel like they have to. However, this pressure to work late leads to a 20% decrease in productivity during the day, increased work-related stress and burnout, and lower job satisfaction. So if you force employees or you compel employees to work late, to work more hours, they will be less productive during the day. This kind of seems obvious, but now we have data to support it. We have a survey to support it. Brian, welcome to the live stream. Brian says, when I get my next tattoo, I'll listen to you so you can say someone got CPE while getting awesome. A tattoo.
That's wonderful.
Amazing. Maybe at some point, Brian, we can sponsor a tattoo.
Well, I have a challenge. When Earmark gets its 100,000 subscriber, I'll get an Earmark ear tattoo.
You'll get an Earmark ear tattoo, the logo?
We get 100,000 subscribers. Yeah.
Where would you get the tattoo, David?
I don't know, probably forearm or somewhere. I don't know.
Okay.
On my ear. Make it green.
on your forehead?
Forehead, yeah.
Hey, thanks everyone who has joined us live today. We got some folks in the office getting ready. And just like us, you can't take the time off. We have done this show now every week for how many years, David?
5.5.
April
of 2018, basically. Yeah.
This is episode 365 5, I think. Not all of those were weeklies.
Had numbers. Yeah,
Yeah.
not all had numbers. We
But
had bonuses and
approximately,
extra ones.
yeah.
So we're probably pushing 500 episodes total.
All Pro Lemonton Z says, left Big Four for internal audit, first time not having a busy season in 4 years. Congratulations. How does it feel? It must feel amazing not to have to worry about that. Although I'm curious, does internal audit have any compression, any workload compression at all, or is it all smooth? I feel like it should be, right, if it's properly managed, but I don't know. I never did any internal audit. I don't even know any internal auditors. So let us know if you want to. Well, I guess the question is, are you there yet, or did you just change jobs? That would also matter. But anyway, I want to get back to the survey. So here's the important thing, right? So we had this 20% drop in productivity. So David, I'm your boss, right? I make you work late. The problem is the next day now you're 20% less productive. So let's math this out. If you work late,
then I want to work extra, right?
Well, so if you work extra in the evening, the next day you're less productive. So it kind of like offsets itself, right? Like let's say you work an hour after hours or 2 hours today. Then tomorrow you're 20% less productive. 20% of an 8-hour day, let's call it a 10-hour day since we're overworking you, is 2 hours. So we just lost it. So there's no net benefit for the people you forced to work late. Now the difference
does it compound? I don't know.
Well, if you're always 20% less productive during the day, then all the extra work you're working after hours, right, doesn't help.
Move the needle, yeah.
Now here's the thing: if people work of their own accord during post-work hours, they actually have slightly greater productivity and wellness scores, and don't report the same amount of negative impact that their pressured to work peers do. So, if you can motivate your employees to want to work overtime, there's no disadvantage to that. Now, also, there's some interesting data in the survey about surveillance. The pandemic led to increased surveillance of remote workers by bosses and executives concerned about productivity. However, research indicates that workplace surveillance can negatively impact job performance and increase the likelihood of employees quitting. It also encourages productivity theater, where workers spend time appearing busy after completing their tasks. The survey found that employees appreciate autonomy and the ability to manage their own time. Half of all office workers rarely or never take a break, leading to high burnout levels, worse work-life balance, and lower productivity. Allowing employees to decide when and how they work appears to improve their job performance.
How much of this is management, and how much of it is just people's own personalities? Where you put this burden on yourself to answer every email, work extra, even if you're managing your own time, right?
Right.
You like, I need to get this done, so I'm going to skip my break, or I'm not going to take a lunch day, or I won't shower, especially if you're working at home. I'm not going to shower today, like because you're like, I need that half hour, I need that 20 minutes, or I can't go to the gym, right? How much is it people's personalities versus management really controlling them?
Well, that's like nature versus nurture, the classic argument, right? But I think a lot of it is the environment we're in. So I just think back to the brief time when I was in a big public accounting firm, and we had the managers on the outer ring of the office, and then we had all the staff in the bullpen in the middle. And I had staff tell me that they would just stay at their desk all the time and not leave and take a break, because when the partner walked around, they wanted to be there, visible, because that's how
productivity
a lot of
theater.
That's productivity theater. So not taking the break is productivity theater to make the partner think that you are being productive. In reality, you are not being productive. And you know what's interesting? I wonder how much time that people are in offices during busy season is just completely wasted. And it's just people being there for productivity theater. And the reason I think that is because you and I were just having a chat with Gail Perry at CPA Practice Advisor. And she told us that CPA Practice Advisor, a publication for CPAs and CPA firm owners in particular, gets most of its readership in January, February, March timeframe, which is supposed to be the time when everybody's working.
Too busy.
So what are people doing? They're probably sitting at their computers and they're reading websites. They're not working. But it's this productivity theater, right? You've got to be there in the office supporting everybody. And that's why we have had these mandatory Saturdays, which I think are finally starting to go away. David, you had some information about mandatory Saturdays?
Yeah, we could jump over. There's a Accounting Today. I'll share my screen. So Accounting Today has their, and it just came out this morning, the 29th. Just this morning it was released, their year ahead in numbers, where they've surveyed about 300 firms, comparing their thoughts about the future, what's happening in 2024. And I'll skip down to that slide. You're talking about working weekends. Tax life balance. So they do plan on working less Saturdays in tax season this year, firms do.
So,
as you can see, compared to 2023.
So in 2023, 40% of firms made staff work all Saturdays in tax season. Is that what this chart is showing?
I don't know if that's a record of what they did. I think it was the record of the previous survey of what they
intended to do
last year, right? So this is a survey of intentions. It could have been 80% that actually did it, right? But they have better intentions this year.
Yeah. Well, so last year it says 40% said staff have to work all Saturdays, and 23% of firms said they only have to work some Saturdays.
Yep.
And this year, what are the numbers?
So 34% think they're going to have their staff work all Saturdays, and just 32% think it's going to be some Saturdays.
Okay. Well, I guess that's an improvement, right? I mean, we're down 6%, 40% to 34%, but it still concerns me that like a third of firms are making their staff work all Saturdays.
And that could be, I mean, another part of this survey that actually wasn't, so they summarized it in graphs on this post, but then the PDF of the survey had an interesting chart we can jump into.
I just can't believe, I know this is classic, but like to make your staff, all of them, work every Saturday is insane to me, because what if you have staff who are really talented, who get all their work done? They still have to come in? Like, there's no incentive to be efficient.
But a third of the people they were in the survey do not have a strategic plan at their firm. So if you don't have a plan, and you just run around in chaos, you probably expect to have to work Saturdays because you didn't plan a way to not work Saturdays.
That's a good point. Okay, so you can walk us through this chart.
All right. So this is a large-scale planning they were asked about. Right?
Is this the same survey?
Same survey. This is just, this graph wasn't in the summary post. It was deeper in the deck, right? So this is on page 10 of the actual PDF that's on the story. We'll link to everything. And so they same survey, they basically asked, about planning. So a strategic plan. 61% either say they have a current plan or plan to implement a strategic plan. But that means 1/3, almost 40% don't have any plan, any strategic plan.
Well, and it says only 41% of firms currently have a strategic plan.
Yes. Yeah. So less than half have a strategic plan right now today.
Which, I understand, right? Like most firms are small. Yeah. And if you're a tiny firm with just 1, 2, 3 partners, you're not going to, what are the odds you have a document strategic? Do we have a strategic plan, David? You and me?
In our heads, we talked it out, but it's not written down.
It's not documented, no. Not yet, anyway.
But what really concerns me about the plan on this, 50% are planning or have a plan for a succession plan.
So that means 50% have no plan, or not even
no plan at all. But when you think about succession plan, who does that solving for usually? Partners, right?
Yeah.
Right?
Well,
Partners,
and the survival of the firm, the clients.
Survival of the firm, right? But this kind of feel like is the issue with retention, and we can talk about that on some of the other slides. But if you think about only less than a third care about having a plan for a health and wellness program. Less than a third basically want a mentorship program, right?
Yeah.
A mentorship or sponsorship program. 60% to have zero plan to become more diverse, right? So it's where the focus is, right? The focus is succession, right? Not taking care of people lower down on the ladder.
Yeah.
From a planning perspective, making plans around those types of things. But I imagine you can't do any of the others until you have your main strategic plan. Like, how can all firms have a plan? Especially if you're in small business cash and you're advising clients, like, aren't you helping your clients make plans? Like, this is the pot kettle
Well,
here on that one.
this is actually a great job for AI. Ask it to help you make a strategic plan. It could at least get you started, get you thinking about what categories you want to have in your strategic plan.
Yeah. So
maybe we should do that.
They all have expectations to hire more. Firms in the survey want to hire more. They all have expectations to hire, obviously based on the size of firm. Firms that are like staff 29 or 20 employees to 99 or 97% are expecting to hire one or more staff in 2024. But what's interesting,
I wonder where they're all going to come from.
Yes, and that's where this next graph. So they have their diminishing expectations. So this is average number of staff firms expect to hire in the year ahead. And in the 2022 survey, 46% of the firms responded saying they expect to hire in the year ahead. But in the 2023 survey, only 22% say they expect to hire. So I'm wondering, is that a result of less hiring plans, or is it just they've reconciled the reality of, oh my God, it's going to be so hard to hire. We're just
not even going to try.
It's not even try, but just they have realistic expectations now. Like, oh, I'm going to have positions I might not be able to fill.
Yeah.
Right? I thought that was interesting. And then one thing, they had a question that's really indicative of where people's heads are. And it's a really good question. It's like, what's keeping firms up at night? And they ask small firms, they ask mid-sized firms, and they ask large firms. And really for small firms, if you look at it, a lot of it has to do with like staffing. Right? They can't keep up with tech. They can't keep up with regulatory change. They probably don't have a sales team to find new clients. So they're having a lack of staff. They're just not big enough, these small firms, right?
Yep.
Mid-sized firms, you look at these, recruiting retention, 66%, keeping up with change, 33%, partner and staff accountability, 28%, managing remote hybrid staff, 24%. These are all management issues. They're having management people, HR issues, right?
This is interesting to me as how much of a difference the recruiting and retention is at the mid-sized firms. 66%, that's their biggest issue. And it's only
33% at the smaller firms.
So it's twice as, the bar is twice as big for the mid-sized firms with recruiting and retention.
And that's possibly because they have enough staff where it helps these other things get solved, but they have a whole different set of problems. The fact that they have to keep partner and staff accountability, like that's a big issue they have. Now, big firms don't really have that. Big firms still have the recruiting retention issue at 65%. But really a lot of again, succession planning is important at the big firms. Like that keeps people up at night.
Well, and that's the thing is, right? So right now, I keep hearing how the mid-sized firms are getting bigger and bigger because they're absorbing all of these smaller firms that don't have a succession plan. But now the mid-sized firms have a problem, which is they have all these clients and partners that came in from the small firms, but they're having trouble keeping the staff.
Yeah.
Because one of the benefits of working for a small firm is you get that smaller firm culture. You get probably more flexibility. And you go to a mid-sized firm and now they're making you come to the office and they're making you use certain tech. And, there's a lot of disadvantages to working for a mid-sized firm. It becomes more corporate. Culture might not be what you'd had in the past. And like, at what point does this become a crisis?
Yeah, because if you acquire 3 or 4 firms, now you have different managers, there's politics. Like I could see why these mid-sized firms, like these are the problems. They're all people and HR related issues. One thing that I was a little confused about on this slide, so they want to ask how much time these firms are spending on compliance, advisory, and administrative. And pretty much it's 20% administrative, advisory is 35% of their time, and compliance is 44% of the time. But they're asking them, like, if you're going to, like how you're going to spend on these areas going forward in 2024. Are you going to increase more or decrease? 27% of the firms expect to increase compliance, 49% to increase their time spent on advisory, and 16% expect to increase for administrative. And the only decreases that were major were really the administrative. 18% of the firms think they're going to have less. But if you take these 3 things and think about opportunity cost, if you have the same person answering the question, if 49% are saying they're going to increase the time spent on advisory, 27% are saying compliance, wouldn't a decrease in administration have to be higher? It's almost like nobody's being very logical about their pie of time, right?
Yeah.
You can't do all 3 of these if you increase 2 of them.
So, and the contradiction in the profession right now is there's this big push away from compliance toward advisory, but advisory is the hardest thing to staff because it requires the greatest skill to deliver.
Yep.
So if you're a mid-sized firm and you're like, let's build an advisory virtual CFO practice, that's really challenging right now with the talent shortage to pay and hold on to those people, because you need mid-career professionals. You need CPAs, finance professionals in their 30s to deliver advice. You can't do it like these consulting firms like McKinsey and put 22-year-olds advising CEOs. You can try, but I don't think it's going to work in the CFO role, in the finance role.
Yeah.
So,
and the only last one they had a graph of, which I wish they would do it a little bit different, is they're talking about the percentage of firms that are filing extensions for clients.
mm-hmm.
And essentially,
this is fascinating.
1/3 of firms are putting 25% of their clients or more on extensions. And usually the bigger the firm, the more clients they're putting on extension as a percentage. Right. But I think the question I'd rather see is how many firms are putting 100% of their clients on extension to smooth out the workflow for the year versus, we didn't get the work done. Hurry up, put them on extension. Yeah. Right.
So we have heard from a few firms that do this. When you become a client, you agree 100% you will go on extension. All the clients go on extension. And they, like you said, the work gets pieced out over the course of the year. You could totally do this as a firm right now. There's so much demand for your services. If you have a full book of business, instead of getting rid of clients to make room, because you have to do all that work in like 3 or 4 months, you could just make everybody agree to go on extension, and you could keep the clients and spread out the work. So,
because essentially you've eliminated all deadlines.
I know people say
a deadline at the very end, but
I mean, you still have to figure out the tax liability because you got to pay the tax, right? But you don't have to file the returns then, like in April.
Yeah.
So that does help, and it does help spread out the work. And I don't understand why more firms don't do this. And I know the clients push back on this because, I want my refund or I want to get it done. But like, you have control, you have leverage. If you're in demand, you could make this a requirement. It's totally doable. And we've heard from firm owners who are doing it successfully.
And that's where you put people that have that argument, you're like, great, next year you'll be the first return done because we're going to put you on our tax preparation plan all year where we figure out your estimated and we figure out things along the way so we can instantly do your taxes, right?
Yes.
Either way, you're going to go on extension or you're going to buy the I'm better prepared plan, whatever you want to call that, right? Moving through.
We got a question from Chaitan. Chaitan says, "Hi, Blake and David. I am a junior accounting student right now. I love the podcast and resources you guys share. What advice do you have for me as an accounting student to navigate the uncertainty?" Well, first, thanks for listening. And I'm so glad that you are studying accounting because we do not have nearly enough accountants in school. So stick with it.
That's my advice. Do not quit. Yes.
But I agree, like navigating the profession is probably the hardest thing. There are awful jobs in accounting that will burn you out and will make you want to quit and leave, like many people do. And there are amazing jobs in accounting that offer flexibility and freedom. And that's what drew me into accounting, was that flexibility, ironically. That's why every time we do our busy season shows, I have a hard time understanding why this is the way the profession is, because there are plenty of roles where you don't have this workload compression. And it's almost like we do it to ourselves in a lot of ways. Gosh, I mean,
I'd say just don't, you have to stick to it and don't quit, because you're going to have a bad accounting experience. It's a roll of the dice. It's probably high probability. Somewhere along your journey, you're going to have a bad accounting experience. Just don't quit the industry. There are good accounting experiences out there. You just have to not quit. Really.
Well, I guess I would say, like for me, I think the best area to go right now is accounting services, client accounting services, advisory services, virtual CFO kind of stuff. If you can do that, I think that's really rewarding in the right firm. I mean, but I'm biased because I got my start in bookkeeping. And so I accounting software and bookkeeping and combining those two things and figuring out how to automate all the bookkeeping and the flow of the data, as Doug Sleater calls it, the digital plumbing. That's fun.
Plus, I mean, it's rewarding, right? Because you're providing value
Yeah.
to the client when you're helping them with their bookkeeping and that stuff versus an audit, which arguably people are saying is not even valuable anymore.
But I also see how tax can be like really rewarding and exciting and fun. There was this one partner at Armanino who specialized in real estate in LA, and the nesting and layering of all of these different entities and the ownership interests, the diagrams she had actually printed out for one client that was a huge real estate investor, this flow chart of like LLCs that had 50 entities or something or more on it, and was really proud of this and showed it to me. And I just thought that's so cool. Like, to be able to understand that and to be able to manage that is really interesting. I guess my advice would be just like, find something that you find fascinating in accounting and follow that. Because if you really enjoy the mental challenge, then you'll be able to overcome any of the work issues, environment issues. And that's true, I think, for any job, right? If you really love the job. So don't take a job just because it's secure. You don't have to worry about that anymore. There's plenty of jobs in accounting. I mean, work on those interpersonal skills, right? Not all of us got into accounting because that's our strong suit. So if you can like do Toastmasters or something similar and learn to like network with people, I mean, that's also really challenging, right? The young people don't get as many in-person opportunities these days. So much stuff is online. If you can build up those skills where you can like talk to people in person and be personable, your opportunities in accounting are really unlimited. So if I guess follow your passion and work on those personal skills. And then, of course, have the basic knowledge, get good grades, right? Understand what you're talking about. If any of our listeners have feedback for Chaitin, please feel free to put that in the chat. We'll pass it along. Madman Dan is talking here in his comment about that idea, David, of extending everyone. Madman Dan says, we always had that on our engagement letter. I never understood why firms stressed it out to get clients to agree ahead. Put the extension through. Awesome. Good to hear. Joe says, wish I didn't have a call at 12:30 p.m. Love being able to see these live. Sorry, Joe. One of our New Year's resolutions is to figure out how we can get this show to be like on a regular schedule when we live stream, and somehow even send you a calendar invite so that it just shows up on your calendar. And we need to figure out how, if we change the time, it just changes on your calendar. I think a lot of people would want that. Actually, if anyone is listening and knows how we could accomplish that, where we can like send people can just sign up for a calendar invite. We thought about using a Google group or something to do this and just putting like a link to the live stream in there.
I think we're able to do it through the Earmark app. I think
through the Earmark app.
Because the app's on your phone, it connects to your calendar. That's the way we're going to do it soon.
Madman Dan says, agree on the automations. Should check out or join some groups or online communities to see what tools are used by some of the techie firms. Helps to take time to learn the tools and to gain experience. Yep. Oh, and that's a good point, is find a firm that doesn't work you to the bone so that you have time to develop your skills beyond just whatever the work is that you're being assigned. Because that's how you increase your value, especially when it comes to technology. So like, look for a firm that's using the latest tech, or that gives you the time to learn the tech and implement the tech. I think that's really important.
Do you want to talk about, I think you had a story about a judge or something said audits don't matter. I'd love to see this. Because I have an audit story too I could possibly tie.
Yeah, so this is just I've got a bunch of follow-up stories and then some new stuff. And I guess, audit is something that we talk about a lot here on the show, because that's how most people in the world, know accounting, right? It's to get your taxes done, but also in the business world, it's, audit reports are important, right? Like, or are they, is the question. And the Wall Street Journal has been just beating up the big audit firms all year, for years now. and pointing out some of the deep embedded problems in audit, and especially audit of public companies. This headline in the Wall Street Journal is, "Burned investors ask, where were the auditors? A court says, who cares?" So this is the result of a ruling by, was it the Second Court of Appeals? The Second U.S. Court of Appeals, in a case in which BDO got sued for a failed audit. Basically, and this happens all the time, right? The auditors didn't do their job, and a company misled investors, and investors lost a bunch of money. So it was an insurer, AmTrust Financial Services. BDO USA was the external auditor. AmTrust Financial Services overstated its profits for years. Eventually, as tends to happen, the truth came out. Investors lost a lot of money, and they sued the auditor, saying, hey, you signed off on these financials, right? You issued a clean opinion, unqualified opinion, right? We want our money. And you would think this would be good for the auditors, that the court ruled that BDO was not liable. But the reason that the court dismissed the claims against BDO is because they said the audit report is so generic as to be not material and therefore did not matter. So no investor could have actually relied upon the audit report, and therefore the case is dismissed against BDO. Like, think about that.
This goes to your argument, which people are buying stock. They don't care about the financials. They don't care about the audit reports. They're buying stock for other reasons, right? They're investing in companies for other reasons. But the second something goes wrong, now the investors are like, why wasn't I warned in the audit? That's basically the argument of the case here.
Right. And the court said that, no, you didn't actually rely upon the audit because the language of BDO's audit report was so general that an investor wouldn't have relied upon it. Consequently, the court said the audit report wasn't material, meaning it didn't matter, and upheld the dismissal of the claims against BDO. So I love the irony of that. Auditors, one of their primary jobs is determining what is material and what is immaterial. And if it's immaterial, then it doesn't matter. And the court said that BDO's audit report is immaterial because it's so general to be useless.
And so this is going to encourage BDO on all future audits to be as generic and useless as possible so they can protect themselves from legal troubles?
I mean, well, this is actually the outcome of regulation over years and years, in which we have made the audit report so generic, so standardized, to render it inherently useless to investors. So, like, we've created this situation as the accounting profession. We created a situation where we are so protected, the auditors are so protected from any potential liability. We've removed the risk entirely from the audit. As long as you check all the boxes, which is easy enough to do, right? There's no risk. And, Ron Baker, he says all the time that profit derives from risk. If you don't take risk, you can only make a small profit.
Yep.
That's the nature of trading in commodities, right? Very little risk, very little reward. The bigger risk you take, such as starting a business, right, investing in startups, you can have a massive reward, right? And so because we've regulated audit into this state where there's almost no risk, there's very little reward, which means the profits are capped. And this is why salaries have not changed in 10, 20 years. Because when you reduce the risk, you reduce the money, the profit,
it's just a commodity,
the reward. Right, it's a commodity.
There's no service. There's no value add. Yeah.
Right. So a company has to get an audit, and they have to just they just have to get it from somebody. So the only distinguishing factor between audit firms really is the size of the firm. Can they handle your audit? Other than that, it doesn't really matter. And it's a pass-fail system. So, it's sort of like the CPA exam, where all the audit partners are just trying to do enough work to get that to pass the client and nothing more. So why is audit quality so terrible? It's because we've created the system that incentivizes auditors to do the least amount of work possible.
Does in this article, does it talk about these investors that are suing, like how much market cap or valuation they maybe lost?
I don't see that in the article, but that would be a good question for ChatGPT, wouldn't it?
Because I think I'm seeing this, and like they sued over this. But then I have an article that I saw in Fortune magazine that I'm hearing you, I'm like, oh my God, investors are going to be suing like crazy, 2 firms in particular. So this is an article in Fortune. SPAC companies accounted for at least 21 bankruptcies in 2023, and a staggering $46 billion was lost of investor value. So if we rewind a little bit, when we talk about SPAC companies, these are those special purpose acquisition companies, Blake.
Yep.
And, it's like maybe there's a public taco shop that's listed on one of the public markets. It's cheap. We buy the company, and then we roll our company into that stock, and we just bypass the entire workflow and vetting due diligence of an IPO. Like now
It's a backdoor IPO.
It's a backdoor IPO.
I cannot
Sometimes
believe.
sometimes they call it blank check companies.
Yeah.
Sometimes they refer to it as that.
Yeah.
So you have your WeWorks. These are the companies that have done this. Well, and 21 in 2023 declared bankruptcy, but now they're suspecting in 2024, 140 other SPACs are going to need financing in the next year to keep operating. Right. And so these are kind of shocking numbers, but the real shocking numbers, if we go back to episode 231, you brought this to the show, and we talked about SPACs and how Witham and Markham are doing most of the audits. So this is like
the Big Four,
2021.
Big Four wouldn't touch it.
Yes, yeah, they won't touch it at all. And Witham brags about it on their own website. They even have it. Looks like they made a little image, a badge. They're the #1 2020 SPAC auditory of record.
Is that still there?
Super proud of all these things, right?
Yeah.
But here's the scary thing. So like with them, 90% of all their public audit engagements are SPACs.
90%?
90% are
Wow.
SPACs. So, and between the two firms, 78% of all SPACs, they're doing all of them. So now like step back. If a big chunk of your book of business, your audit business is going to declare bankruptcy, like are these firms screwed? Witham and Markham? Like these are the majority of your audit, well, at least the audit practice is probably in big trouble. If most of these, if they're doing most of the SPACs and that's most of their book of business, and most SPACs are going to declare bankruptcy.
Yeah.
And then
More layoffs on the way.
More layoffs on the way. And then it goes to the lawsuits. Like where this is going to have to bubble up because they're really the only two firms that were doing these. And as a percentage, the Big Four, less than 1% of their clients are SPACs, their audit clients. So these two firms, like they've almost exposed themselves to how do you explain that to the other partners? I'd be pissed if I was a partner and be like, wait a second, half of our book of business is in bankruptcy?
Well,
possibly?
yeah. How do you recruit new partners, right? At what point do managers and directors stop wanting to be partners? And then you
Unless
have a real
you have
crisis.
a good bankruptcy advisory practice and you just shift them over to that division and keep making money on their bankruptcy procedures.
There you go. The smart firms can serve clients no matter what life cycle they're in, right? All the way from IPO to bankruptcy.
But that's the right logic, right? If 100 former SPACs this next year are going to have to take additional financing to keep operating, so they're on the tinkering of going bankrupt, and Witham and Markham are doing most of those, that's a lot of their client base that is in trouble financially.
A lot of chatter in the live stream. Chris Maxey says, I find one interesting difficulty with accounting right now is the work-life balance conscious firms versus nose to the grindstone firms. Hourly compensation with the expectation that they only work 2,000 hours a year versus salary at 2,800 hours is a hard concept for prospects to understand. I agree. Yeah, it looks like to somebody who's never done it, you want to take the bigger salary, but that extra 800 hours has severe consequences for your mental and physical well-being. So, personal story, 6 months ago, in the height of the record temperatures here in the Phoenix area, I decided I just couldn't be inside. We had like 53 days of 110-degree temperatures. And, I have an elliptical at home, kind of like a small one. And it's just like I was getting tired of that. So I started swimming because that's what you can do outside. And I got really into it. I discovered I'd never really swam. I took lessons as a kid, but I'd never really done it as an adult. And my son was taking lessons too, so that also inspired me. I just started swimming at like the local pool. And I've gotten to the point now where I'm swimming. Well, I'm getting, my Apple Watch says I'm getting an hour and a half of exercise every day. So basically, I've set aside like a 2-hour block every day to get exercise. I could not do that if I was in a traditional firm.
2,800 hours.
Yeah. Even the firm that I worked at. So I worked at the largest California-based accounting firm in LA, and I had a commute. I didn't have to work crazy hours because I was in the accounting services team. We called it outsourced finance and accounting, and we had a busy season, but it was much more moderate, right? So I don't even know what it was. Maybe I was working like 2,200 hours. But I couldn't do this schedule if I was in that firm. And the reason I bring it up is because ever since I started doing this like 6 months ago, I've lost 20 pounds and I feel better than I've ever felt in my whole life. And everybody should be able to do this. And I'm more productive when I am working. So I'm actually, I had to cut out work hours, building Earmark. I had to say, I'm going to stop working at this time every day so I can go swim. But the hours that I do work in the morning and the early afternoon, more productive. And the things that I'm not doing are just not that important, apparently, because we continue to have amazing growth. I looked at I don't know what our numbers are for this week. We get a lot of signups at the end of the year. But last week, we were up like 2.8 times what we were last year. So we have doubled, tripled. And I'm still able to do this.
It goes back to your first article about the extra 2 hours a day working, right? That extra work. Like really, if you think about that extra 800 hours for the 2,800 hour work year, you're probably, it really stacks, right? And you're not being productive. And then the next year, because you skipped exercising for a year, you're less healthy, which means you're probably less productive. And the vast consequences of this.
This mentality in the profession where every hour is an equal unit of work output is totally false. And it's probably the biggest barrier to us advancing in accounting is that we have this mentality. You work an hour, you create an hour of output, whatever that is, at your billing rate, right? You work an hour and you create $300 of value. And I mean, it's not true. The Pareto principle, go look that up if you've ever heard of that. It's this idea that, if you haven't heard about it, look it up. It's this idea that 20% of our inputs, 20% of the work we do creates 80% of the outputs. It's a rule of thumb. Definitely applies in sales organizations where about 20% of the salespeople create about 80% of the revenue for a company traditionally. In a lot of other areas too. And I think it really applies to some extent in the work that I do. And so as long as I do those really high value tasks every day, the company will continue to grow and thrive and succeed. And then my goal is to automate everything else that doesn't add a lot of value.
Matthew Canis wrote an article for Accounting Today, and he the piece that really stuck out in this to me is really aligns with this. And he calls it out as like interest versus action, right? And if you think about it, all the firms and all these surveys, it's staff shortages, it's inefficient manual processes, it's too much client work. And you really look at it, everybody's trying to hire more and more and more. But then on the other side, the action side, right? Hiring can't be the only action. And there's other surveys who are saying basically 82% of accountants say they're intrigued or excited about AI, but only 25% are actively either training their teams or trying to use it or implement it, right? And it's like maybe the answer for a lot of our problems are not just hire more. Like people start having to go other paths. It's not more hours. Like make people work 3,200 hours a year instead of 2,800. Maybe that'll solve the crisis. Yeah.
The firms that we talk to, that I interview on my Earmark podcast, one of the themes is reducing what you do, cutting back. We talked with Keela Hill Trawick
Yep.
on our
2 weeks
show
ago or
recently,
3. Yep.
and she scaled back the services she offered. She got rid of payroll and she got rid of paying bills for clients because that way her team wasn't dealing with urgent payment requests and they could have
Constant
more
deadlines. There's always deadlines. Yeah.
Right. And I've done that. Anyone who's done that knows payroll and bill pay require you to be available and to not mess up like on a daily basis. And you can't really it's really hard to take time off on a small team. And she has a small team and doesn't want them to be beholden to those deadlines. And so she got rid of it and her firm is growing and they're happier. That's something that doesn't happen a lot. In most firms, it's just add services. So we got some advice for Chayton. HK Geek says, Chayton, know your worth. Don't tolerate the bad. And also be kind to yourself. Yes. This whole question from Chayton takes me back to the interview we did with the UWorld guys, Peter Alinto, formerly of Becker, and Roger from Roger CPA. And I understand their attitude or their teaching method, which is like Peter Alinto in particular. He's all about motivating his students to push through the CPA exam, like set aside everything else, tell your family for 6 months you're going to be studying, don't get a girlfriend, sacrifice for the big financial benefit of becoming a CPA someday. And that's true, right? There is a tangible benefit. You make a lot more money as a CPA than you do without it. But the problem is that if you sacrifice like that for too long, eventually it becomes ingrained, and then there's nothing left for you as an individual. And the firms are complicit in this because they continue that. So you become a CPA, right? You study for the exam, and Peter encourages you to work yourself.
That becomes your personality, right?
Right. And you have nothing else in your life. And you think, oh, that's just going to be 6 months, a year. But then you go work for the firm, and the firm now says, just grind it out. It'll be worth it later. So you grind for 2 or 3 years. And by the time you've been grinding for like 4 or 5 years, it becomes really hard not to, because it becomes ingrained in you and you don't even know what to do when you're not grinding. I was like that in school. I was really good academically. I worked hard in high school so I could go to a really amazing university. I went to a top 10 school, and I didn't know what to do with myself when I wasn't studying. And I had a crisis when I graduated, and I realized the real world was nothing like this artificial environment that I'd been conditioned in. And I kind of wish that I'd figured that out a lot sooner. I'd have 20 years of my life back, I mean, I'm glad I figured it out now because I'm not like a 65-year-old, audit partner who's just realizing this.
So somebody might have figured this out. I don't know. So this is a story about Caitlin Johnson. She's 19 years old and just received her Bachelor of Science in Accounting from Athens State University. The way she did this, apparently she fast-tracked some of her homeschooling experience and then pounded through high school kind of early and was able to get some community college credits and then transferred over and in 2 years to pop this degree out. But what's interesting about this is they're talking about her future plans. So she wants to begin graduate school. And then after that, she's interested in becoming a financial advisor or serving as a CFO of a company. But like nowhere in the article does it mention plans to be a CPA. Which so I'm trying to like be this could be a feel good story for the ICPA, right? And like this win, look at young people excited about accounting, but there's no mention in the article. So it's either the article just left that out, or she truly does no intentions of becoming a CPA, and then it makes you wonder, right? Has she figured it out? I don't know.
Going back to the ruling by that second U.S. Court of Appeals, Madman Dan says, that ruling was kind of savage. Wonder, does that ruling give precedent in some way for future cases? LOL. Possibly. Well, I guess the question is, what's going to happen next? Because I think like the SEC commented on this and said, this is, audits are valuable, right? They protect investors, all that stuff. But like, I don't know. I'd be curious to know.
Well, I think we're going to see a lot with all these SPAC cases. There's going to be hundreds of these that are going to go belly up here soon.
Curtis Smith says, "Hi, Blake and David. I'm a Master of Accounting student entering the field. I am wanting to do tax. I heard a lot of audit horror stories. Do you think mid-size, do you think, do I think of mid-size or local firms to start my career? Do you think of mid-size or local firms to start my career?" So, I mean, I primarily network, like my social world is small firm owners, progressive, remote firms that are not like traditional firms. Most of them don't even have offices. So that's the world that I live in. And I think they're great. Now, there's disadvantages to starting in a small firm, which is like you'll get less experience working with big clients. And so that's something that I really don't, I'm not really qualified. I mean, so I got to work with some big clients for like a year before I quit the big firm I was at, and that was a really interesting experience. So there is valuable experience at a larger firm for sure.
I mean, it's not 100%, but I think like most of these small firms that are progressive, right, forward thinking, doing really amazing things right now, almost all of them have been started by people that did do a stint in public or at a big four at some point in their career early on.
Yeah.
Obviously, they figured out what they liked and didn't like, and they started their own firm. So to say there's no benefit to it at all would be harsh to say, because it's influenced how they're running their firms.
And I'm one of the biggest critics of large firms. And will actually tell you, based on my experience, I learned a lot. I didn't last very long, right? I didn't last the 2 or 3 years. I lasted 1 year. But I still learned a ton in that 1 year at the large firm. So I think I'm going to go on the side of, as long as you don't get brainwashed. Does that make sense? Like, go work for the large firm, but don't let them condition you. And they will try to brainwash you.
Well, that takes place earlier at the university, I think.
Well, it starts there, right?
For the big four, yes.
Yeah. You got to understand, the way these big firms work, they're like a machine. They are designed to extract as many billable hours out of you as they can get, because that's how they charge clients. Even if stuff's on a fixed fee, the whole performance incentive management system of the firm is all based on realization, utilization, billable hours. And you will get really messed up if you are a super ethical person in these systems, because the way to get ahead is to lie on your timesheet or distort your timesheet. Call it whatever you will. It's not to report the actual hours. And you can't let that turn you away from accounting either. I mean, it's awful that that's the system that we live in, but like, you just gotta, you know, if you can't do that, what'll happen is you'll bill the wrong amount of hours, and then you'll piss off somebody, and you'll get managed out. You know, like it's a messed up system.
And if you're going to do it, go look at something like BDO. So at least you build up a little equity for 2 years. If that's
right.
Your plan, it's like, hey, I'm going to go get 2 or 3 years of experience. You know, maybe I get ability to travel. Maybe I can participate in a remote audit type situation. But at least you're building up some equity. So after 3 years, you left with something versus all the other firms that don't have any employee ownership type models.
If you're in the live stream and you see Curtis's comment here, and you have some advice for Curtis, you know, you probably, if you're in tax, you're definitely more qualified than me to answer questions about tax. I know lots of people who are in it. If you can, like, some people really like the workload compression, and they'll earn like 80% of their income in 4 months and go do adventurous stuff the rest of the year. If you can hack that, like, if that works for your personality, that's great, I think. Like, find something that fits there. But maybe you don't like that. I found that I actually really like spreading things out. I like working a little bit every day. And I'll even do that like on the weekend, right? I work kind of just constantly. And it's just sort of like I'm always working, but I'm also always on vacation, if that makes sense. Like, I like that kind of lifestyle. You have to find what works for you. Chayton says, Summit Virtual CFO seems to be doing it right by measuring outputs and not inputs. I think they are definitely one of the, I mean, they're now part of a big firm, Anders. They're like a $13 million practice now, but they've still kept their own, you know, organizational structure. And I just interviewed Jody Grundon, the founder of Summit CFO, on my Earmark podcast. So go search for Earmark on Apple Podcasts or on Spotify, and you'll find Jody. He's the founder. And then I interviewed 2 of his virtual CFOs who are in their 30s. So go search for Summit CPA, and you can listen to both of those interviews. And I agree. I think they're doing amazing. And they've got a performance compensation system that is based on your book of business as a virtual CFO. So you can choose how much you work based on how big your book is. And if you're really efficient, you can actually make a lot of money and work less, which I think is a great structure and would have appealed to me versus me just billing a bunch of hours or being more efficient and then lying on my timesheet.
Yeah, motivate your staff to figure out how to handle twice as many clients by using whatever means necessary, technology, automation. Hopefully they share with their other team members. But yeah,
Chayton says this is really amazing advice. I've always worked too many hours and need to avoid that when I get into my long-term career. Yes, especially when you're young. Like, I kind of regret I didn't travel more when I was younger because I was working, and there are definitely benefits. Like, now I have the money to travel and I have the time to do it because I've like set up my life that way. And I don't know if I necessarily would be where I am now if I hadn't hustled more when I was younger. But there's trade-offs, right? Like, my knee, I'm 40 years old and my knee hurts like every day a little bit. Like, like there's certain things, like I'm gonna go hike Half Dome this summer, hopefully. Like, I have to worry about whether or not my leg is going to be able to handle that. I would not have worried about that 15 years ago, right? Like, there's things you need to like contemplate. Like, your life will be long, but your physical health, like the point of your life where you are in this peak physical condition and can do really cool stuff and travel and just deal with anything like that doesn't last very long. So I would say don't give it up completely. Chayton says, I have a friend who has taken all of the CPA exams as a sophomore in college through Guam. Do you know anything more about this? I don't. If anyone does, feel free to chime in. David has put the interviews with Joey and Hannah from Summit/Anders.
Actually, I didn't do that either. Somebody else did it.
Oh, sweet.
we have invisible hands.
Thank you to the Earmark
hands
team.
At work. Where's the Earmark team putting those?
Yeah, those are on those are on YouTube, in the YouTube comments. So if you're watching on YouTube, you can find the link there. Awesome. Wow, this hour just blew by.
It did go fast.
What do we got left?
I mean, you turned me onto this story. I didn't see it on social media, but I guess it was pretty big. And we don't talk about it too much. It's more of it just pisses me off about apparently the accountant that had a breakdown at the airport.
Oh yeah, I saw that.
And apparently there's another video of him cussing out a neighbor. So he's gone viral twice apparently already.
Oh,
and
no.
so he might just be an asshole for all I know. Who knows, right? But the problem is the way the media treats us. Now, both these stories were in the Daily Mail, the UK, right? Which is very National Enquirer style reporting per se. But they could have said like crazy bald guy, crazy dog owner, crazy traveler. But no, instead they chose to say crazed accountant, right? And that's just like this goes back to throwing the IRS under the bus in the Barbie movie, and just this freedom of the press and mainstream media just to constantly toss accountants under the bus, right?
Yes.
And I'm always like, where is the ACPA defending this, right? Like, come back, like, because there's zero reason to mention he's an accountant at all,
Right.
right? Like you said, some asshole loses his mind at the airport. No, instead they said accountant. But then I just searched for crazy accountant on Google, and you get things like crazy accounting lady, sex crazy killer accountant. There's like these other, like, it's so common. Like, we have to start breaking that stereotype. I mean, that's really the story there. It's not so much his video. It's just the fact that they could have chose any other title to refer to this guy, and they chose to put the profession in.
Yeah. Yeah.
It wasn't at a firm. It had nothing to do with accounting in any way, shape, or form.
No, but I guess crazed accountant was what they went with. It's
I mean, is it
part
because
of the
like,
image problem our profession has.
we're supposed to be mild-mannered accountants?
I think so.
And
Yeah. When the accountant loses their shit, that's when you know everything is going bad, right? That's when it's time to
it's an
get
end
out.
of time story is what
Yeah,
it really is.
time to get out. Yeah. Well, everyone, thank you so much for joining us today. For those of you who joined our live stream, we really love having you. And Chayton, good luck on all of your future endeavors. And to any of the students who are listening, accounting is a wonderful field. You just got to find your way. The traditional path is not the only way. And if you have never followed us on YouTube, subscribe. It's the fastest growing podcast platform. You can see us. You can get notified when we go live, and you get the episodes earlier, actually, than on the podcast feed. And you can email us, send us your thoughts. We've got a bunch of listener mail that we want to get to. We might have to do a bonus episode in the new year when you get back from your vacation, David. And we'll get to that. We read all the emails. You can email us at theaccountingpodcast@earmark.me. And don't forget, you can get CPE for listening today. Download the Earmark app from the iOS App Store or the Android Google Play Store. Sign up for free. Get a free hour of CPE. And if you want to support the work we do at Earmark, you can buy an unlimited subscription and get as much CPE as you can cram in before the end of your renewal period.
And I think like for some of you who have payroll, 1099 season W-9s, we might not see you for a couple of weeks. We'll come back and catch up on some of those episodes in January. But then for the rest of you, if you have to actually go into the office and participate in that working theater, what'd you call it?
Productivity theater.
Productivity theater.
Yeah.
Join the live stream, turn it on, press play in your cube,
Well, you're earning CPE, right? So
CPE.
like you're being double productive when you do that. Awesome. David, have a happy new year to all our listeners. By the time you hear this, you'll probably be in the new year. So welcome to 2024. And I hope you have an excellent year, and our best to all of you.